Twitter up 21% with Musk's tentative deal. Tesla selling off in the news. Several other stocks are breaking out. Let's get to it. Twitter closed right around that 43, 44 level, right in here, right? Now, if you get the newsletter, there's a free version of the newsletter. This was in there, and this was in the trading community. We put a position on 44. We closed it today at 52. I don't want to wait around for the last $2. Make sure you subscribe to this channel and click all notifications, because what we go over here is extremely timely. Now, if you take a look at this level and where they're looking at getting bought out, it's an extra $2. Do I really want to sit around and wait for that? What if Musk does something else? Doesn't make a lot of sense. So what we did was trim into it, start reading the details, and then say, okay, he could still say I'm having financing issues, get out of court, pay a fine, and walk on. So we're not so sure that it's a done deal, but the stock's certainly acting like it. And so we just simply took advantage of that. Now, what is Tesla doing on this? Tesla, in and of itself, came in pretty hard on the news. Now, this could be for a couple reasons. Let's get rid of these indicators. There could be a couple reasons why Tesla came in and just dropped like a stone on the news. It could be something as simplistic as they don't think that he's going to be able to get the same level of financing as when he first started to make the purchase, which is a reasonable assessment, right? He might not get the same level of financing. Now, these are three levels for Tesla you're going to want to watch tomorrow. This 255.16, 257.50, and this 246.87. You can see how we respect that. Because his terms might be a little different now, right? Because the credit markets out there are just a little bit tighter, and the cost of borrow is a little bit more. So it might not work the same way as it was once going to work before. So he might be forced to sell more stock. That's the rumor, not the news. And that's what we see happening here. Let's give you a beautiful 1, 2, 3 down, flip on the hammer, 1, 2, 3 up pattern, right? For those that know this, they'll recognize this is really a bullish homing pigeon. I will put those candlestick patterns at the end of this video. I recommend that you watch it. I'm also going to link the video I did on Saturday. So spent about an hour going through quarterly charts. It's definitely something you're going to want to watch if you're interested in what exactly is happening here. And we should talk about what is happening here. So the blue line is the 10-year. The orange line is the S&P. The green is the dollar. Now, we went back to September just so you can see this play out a little bit. But what we're going to focus on is what's happening now. You can see that the dollar is rising, which is causing the treasury bonds to sell off and the stock market to come down. As this continues to happen, you go wider and wider, the dollar gets stronger, people sell more bonds until the UK comes in and does what it does. Starts buying bonds back. As soon as they start buying bonds back, you have a weaker dollar. You have the S&P that starts to go up. Let's pull this over here. You have the S&P that starts to go up, and you have bonds coming in. This is what you want to watch, whether you're watching it on DXY or UUP. We just broke the 10-day on the dollar. Yellow line is the 10-day, and here you are, UUP. On this particular system, this is TrendSpider that I'm using. The other one was TradingView. And you can see how we're acting here and now what we're at. Please comment if you like that, what I just did there. If explaining what the heck's actually going on under the hood is helpful. Some people just want the technical analysis, but I think where you're at now, you're missing half the picture if you don't understand that. But here's your line, so you have to see how you come down, see how you roll here. And I think you can get to this. I think you can get down here fairly quickly, right? So as long as the dollar is weak, the S&P will go up. So the question is, what do we do about it? Well, there's a couple other names out there that we should be looking at. This one was thrown around the trading community today. I like this idea. I think this is really interesting. Russell Brand and Musk's interview will be on Rumble tomorrow. You're getting a little press ahead of that. I'd watch this tomorrow. It might get some buzz. If they have record numbers or numbers of something that they've never had before, this could catch on. This could be a buzz. People are looking for that next platform that might work. Whether this is it or not, or whether it's just all hype, it doesn't really matter. You're just looking for an up and over and then seeing how it acts. And we're seeing these break out. We traded this in the trading room today and did very well with it. But this is typical behavior when you're coming out of a trough like this. Nobody trusts it. Normally, if you're in a breakaway market, this would just keep pushing. You're not in a breakaway market, so everybody is scared. It's like a cat on a hot tin roof, right? You just don't want to be that last person without the without a seat when the music stops, I guess is the best way to explain it. So as it traded up, we just kept moving the stop up, breaks here, got out of some, gave it some time, and then that was it. It was a wrap. So this worked out really well today. I like the trade here long term. I would not rule this out now. You're breaking out here, and you're breaking out of a multi-year high. If you go and take a look at this on a multi-year basis, I forgot that it was actually back all the way where it was before, but getting through this 123.86, pushing through it, 143 now. 175 is doable. So you're going to just have to watch it here and see how these stocks act. But there's definitely names out there that, they look really good. This is another one we bought yesterday when we saw the trend change. And the trend, obviously, that we saw change was how they are talking about interest rates and the Fed pivot. We went over that this morning as well on the public pre-market live call. So you might want to try to tune into those if you're not. They're also set up for replay on the channel. So you can see it just broke out and ran. We bought yesterday around 59 and change, I believe. Still in it, trimmed on the way up. Don't sleep on this because you're not in it yet. So if you're breaking over the 10, start looking to see where you are over the 21. I know people are going to sit here and tell you to use EMAs, and I use SMAs. You use what you're comfortable with. SMAs have been very reliable right now. Watch how you act at that 21. If you flip the 21, you're going to test the 50. It's that simple. So keep that in mind. Something to definitely pay attention to. But as we pivot and as the Fed pivots, whether or not there is a, quote, true pivot or not true pivot, the stocks are acting like there is. And you're actually even seeing commodities acting like there's going to be a pivot. And if you listen to the comments that are coming out right now, it sure as heck sounds like there's going to be one. So we set up here, we broke out. This is Gush. You can see how you're rallying up. You broke through the 200, then you gapped up again. So now I've got two gaps on this chart. You think this is over or it's just beginning? It's probably just beginning, and it's one of those days where you don't want to pay 50 for it, and then you're up $10 later. So I would not rule this out, a close above the 50-day for the first time in about, let's call it 3 weeks. The kinds of names you want to see. This can move fairly quickly and get back up and test that 190 level. So these are far from done, and they're definitely names that I would have on my radar. I would just continually keep one foot out the door on them. It's very difficult to not want to be involved in this market with those ideas that I just presented you with, because you can trade up higher. No one believes this rally. Now, why should we believe it? We're going to get into that. We just walked through the dollar and the dollar's plummeting. We just explained that. Now the VIX. VIX is below 30. I don't need the lines here. Let's get rid of those indicators. And we're below 30. So if we are below 30, that tells us what we need to know. That means we've gone from this extreme fear to we're still fearful and we want to go to that 25. Now, I don't know when we're going to get to that 25. I don't know if it's tomorrow. I'm not sure. I know the rhetoric coming out of the Fed has certainly changed in the past 2 days if you really listen to them. I believe it was a Barkin today that actually had a comment saying, well, if we change what we're doing with the book, meaning their assets, that might count as a rate hike. And I don't think people really caught what he's alluding to there. So that could be something that they could say that, hey, we're going to do this instead of hike rates. We're going to take this off the balance sheet. It's going to have the same effect. A lot of games they can play. But if you take a look at this, watch the 27.5 level and just watch the 10-year. It's telling you everything you need to know. All right. So just so we're clear about this is the 10-year bond, right? This is what you've done so far since the UK did what it did. Okay. Bonds rallied 10%. And if you just throw in your indicators and take a look at it, you broke your 10. You have not broke below your 10 since when? August 2nd. So you're breaking that. If you break this 21, you're going to 3.25. So keep that in mind. You go to 3.25, equities are going to rip. And people are looking at this and they're not believing that this can happen. And that's exactly what you want. You want the non-belief. You don't want everybody believing. You want everybody doing exactly what they did today, being afraid of the 3% rip because they're not going to get me this time, right? And then it's 2 weeks later and they're looking at 412, wondering what happened. So just watch this. Watch how you act when you get up to that 21-day 382. That would be the level that I would watch. Do you have to run in when things are bidding up? No. The best trades that we're doing right now are finding the right names, waiting for a little bit of a pullback, and going forward with them. And the Qs, same thing here. I highlighted this today. 1, 2, 3, 4. I'm going to highlight it again. Okay. If you're just simply looking at technical analysis and you're looking at some special indicator down here that's telling you, oh, we have a buy signal. Okay. Your buy signal got you in here, right? And then you got crushed. What's moving you is the Fed. The same thing that moved us here when we said, well, we don't really have inflation, but we might have to slow down the bond buying. Well, we're going to have to stop buying bonds. Well, we might have to raise rates. Go look at when Powell said these things. Now, this date right here, this is exactly when we peaked on CPI, peak CPI inflation. You can go look at data 12 months out after peak CPI, okay, and see how the market did. It did exceptionally well. On average, it's about 11%. So now, why am I bringing this up? This highlighted bar, this was Jackson Hole. This bar, CPI. This bar was the Fed hike. This one that's highlighted, that's where we know that they are talking about pivoting and most likely have started to pivot, right? So we can look at technical analysis all we want, but unless we understand what the Fed's doing or understand what's driving, you're missing half the trade and you're setting yourself up. When we were in the trading room, one of the things I was hammering home was the Jackson Hole speeches this day. Hey, and I didn't think this was going to be that bad, honestly. But this CPI day, hey, CPI is coming out. Make sure that you have closed your positions that you're not willing to get stopped out of. Fed hike. Make sure you close your positions you're not willing to get stopped out of. Nothing technical here is telling you that, but it's your ability to understand the information that's coming out and at least be aware of it is what can save you a lot of money. So I hope that was helpful. If you're interested in the trading community, there's a link up here in the top right. Simply click to take a look at it. Everybody have a great evening and trade to win.